Hello all, this is Damini from VMake Scholars. Welcome to the 12th episode of our web series Loan Flex Abroad Education Loans Simplified. To summarize, in episode 1 to 4 we discussed the general information on education loans, and then we moved on to episode 5th to 8th wherein we discussed in detail terms and conditions of secured loans from nationalized banks like SBI, BOB, etc. And then finally in 9th and 10th episode we were talking about unsecured loans from NBFCs in India and international lenders. And finally in 11th episode we did compare the secured loan options with the unsecured loan options. Now from here onwards, for next couple of episodes we will be talking about unexplained basics in education loan segment. So in today's 12th episode, I'll be talking about education loan interest rate types, that is simple interest and compound interest. I've seen that a lot of lenders in the market are misusing these terminologies to fool students like you. Let's see how. Let's start with definitions. Simple interest means the interest will be only charged on the original principal amount. Whereas compound interest means the interest will be charged on the principal amount plus the accumulated interest. For example, if you take 10 lakhs loan at 10% interest per annum for let's say 5 years. So in case 1, if it is simple interest, then in year 1 the interest will be charged on 10 lakhs, that is 1 lakh rupees. In year 2 again the interest will be charged on 10 lakhs only, so again 1 lakh rupees. Similarly in third year, and at the end of 5 years if you see, it will be 10 lakhs of total principal amount plus 5 lakhs of accumulated interest. So 15 lakhs will be the total repayable. But in case 2, if it is a compound interest and on annual compounding terms, then it will be like in year 1 the interest will be 1 lakh rupees on 10 lakhs, but in year 2 the interest will be charged on 10 plus 1 on 11 lakhs, so it will be 1.1 lakh. Similarly in year 3 the interest will be charged on 11 lakh plus 1.1, so on 12.1 lakh the interest will be charged. So similarly if you see, at the end of 5 years the total repayable will be 16.1 lakhs compared to 15 lakhs how it was in simple interest. Listen to this very carefully if you want to understand the full game. Now if I take a loan which is a compound interest loan, but they have put a condition that I have to pay the accumulated interest at the end of each year. So what happens is, let's say it's a 10 lakhs loan at 10% interest per annum, but at the end of year 1 that 1 lakh accumulated interest I have to pay them. So let's say I paid it. So for year 2 again the interest will be charged on 10 lakhs only because I already paid that pending 1 lakh, right? So similarly if I keep doing this, at the end of it there won't be any compounding, right? Because I was paying the accumulated interest. But does that mean it's a simple interest loan? I hope you understood till here. I'll explain you how these education loan lenders are smartly using these terms to fool you. If you have any questions still here, feel free to write it in the comments section, and without fail I'll answer each and every one of them. So let's take an example by checking Credila website. They have used the term simple interest so many times in this paragraph to set up a misleading image. Guys, if you just read it 2 to 3 times carefully, you will realize it means Credila doesn't encourage interest on interest because that is additional burden for the applicant and the parent. So therefore they want you to make simple interest payments. Guys, this is exactly the same thing which I just told you. It means Credila is not explicitly saying that they only charge simple interest, not compound interest. They are just saying that you should make your simple interest payments every month without fail so that it doesn't get accumulated, which they are calling as additional burden. But the hidden clause here is, what if I don't pay my full simple interest every month? The unpaid difference amount gets accumulated. And as I just told you some time ago, this accumulation itself is called as compound interest. Most of the times, Credila representatives themselves will give you an option of partial simple interest if the full interest figure is like very high. Then the difference amount actually gets accumulated and is compounded. For example, if your 12,000 is like your monthly interest payment, full simple interest payment, and they tell you like, okay, pay partial simple interest, that is 5,000 every month. The difference 7,000 is actually added to your principal amount that month itself, and you will be charged interest on that also. That's what we call as compound interest, right? If I have to pay my full interest during the study period, then what the hell will they compound? If there is no pending interest amount, so nothing will be compounded. This is what Credila meant by these lines. Therefore, HDFC Credila products require at least the interest payment on the loan during the study period. You see how smartly they have used the term simple by politely indicating that you pay your complete simple interest during the study period. I hope you got the catch. All of these things might be a little difficult to understand. So to get step-by-step guidance and assistance with your education loan, feel free to request a call back through the link mentioned in the description. The concerned financial officer will contact you directly. As you might know, VMake Scholars is actually funded by Ministry of IT, Government of India, and we do not charge you anything for your loan processing. You guys need to know one more thing. The example I discussed at the start of this video was assuming annual compounding. But most of the private lenders are not compounding annually. Instead, they compound monthly, which is even worse. It means if they are considering monthly compounding, then every month your principal amount will be modified by adding the pending interest. This will lead to even higher repayment amount. On Credila website, they have not explicitly mentioned whether it will be monthly compounding or annual compounding. But as you can see in this picture, they have given a slight hint. It says interest may be calculated on a monthly, daily or yearly reducing principal basis, which also indicates that their compounding policies will be as per their wish. On the other hand, you need to know that most of the government banks offer simple interest during your moratorium period, that is during your course period plus 6 months. And that is genuinely simple interest because these banks won't even ask you for any interest payment during your study period. By simple, I mean if you take 10 lakhs loan at 10% per annum, then at the end of 2 years, your repayable will be 12 lakhs. 10 lakhs plus 1 lakh for year 1, 1 lakh for year 2 interest. Yeah. So there is no interest compounding, there are no surprises at all. That's all you need to know. Actually, these private lenders like Credila wants to make it look like that their offering is similar to government banks. Hence, they use terms like we charge simple interest diplomatically with a hidden meaning. Now, when some lender comes to you telling that they charge simple interest, you know what you need to do. Ask them back in a layman language, okay, if my simple interest is 10,000 rupees per month and you're asking me to pay 3,000 only, what happens to the remaining 7,000? Does it get added to my principal or not? And you will have the answer. I hope you like my this insight into interest rates in education loan. Actually like to catch these fishy players red-handed. My alternate career choice would have been a detective. So now you need to know that if you need assistance with your education loan, you can now request a call back using the link mentioned in the description. As I already mentioned, the assigned financial officer will get in touch with you directly and we do not charge any fee for these services. Do subscribe to our channel if you like this video and do like and share it with your friends. Stay tuned for my next episode, which is gonna be on education loan takeovers. That will talk about if you have already taken a loan from an expensive lender whom you don't like anymore, how to shift it to a better one.
Don't forget to subscribe and click on the bell icon to never miss any updates from us.